We're going to keep score, see how they did next time they're back. Joining me now, two new Stock Club members. Derek Iswell is Senior Portfolio Manager at AIM Investments. He manages $479 million in the AIM Global Equity Fund. It's rated 4 stars by Morningstar. Michael Kudlow is President and Portfolio Manager at the Permanent Portfolio family of funds, where he manages the 5-star Morningstar rated Permanent Portfolio of funds. Gentlemen, thanks for being here. Remember, we're going to go lightning fast, and I might push you along if you get a little long-winded. Derek, let me start with you. You like Hewlett-Packard. Why?
Well, we're quantitative investors. We use a set and series of mathematical and statistical models that we develop to invest in each industry based on what we've found are the types of criteria that generally predict stock outperformance.
And
in the technology sector, and in the technology sector, some of the things we look for are improvements in expectations, particularly in expectations of earnings growth, and we like to see substance in the balance sheet activity and the investment return on investment that those companies are exhibiting that give us the confidence that those expectations will continue to improve.
And Hewlett fits those criteria?
That's correct. Hewlett-Packard's one of the firms that exhibits those criteria.
Michael, you're picking Williams-Sonoma, WSM, in the retail sector, even though there's all this talk of a consumer slowdown.
Yep, there is talk of a consumer slowdown. I'm not sure it's going to be as bad as people say it is. We like Williams-Sonoma, a lot of great brands. They continually meet expectations, revenue targets, earnings targets. They did pre-announce for a slight drop going forward for the end of the year, but I think long-term it's a great investment, and we're long-term shareholders.
Derek, you've got another technology stock. This one I haven't heard of, though. Garmin, GRMN is the symbol.
It's a bigger company than you think. Garmin is the leading manufacturer of both consumer and commercial GPS systems. So everything from your handheld GPS to the GPS that goes into general aviation airplanes. And it's got the same characteristics at a different scale that we saw in Hewlett-Packard, improving expectations and activity that we're seeing in the financial statements that lead us to believe that there's some substance to the improvement in expectations in Garmin.
And certainly anecdotally, we're hearing all about GPS left and right, certainly growth there. You've got another tech name here that you like, Michael, Qualcomm, QCOM, of course.
Yeah, we do. It's a play on the next generation of wireless communications and telephones. We think it's going to be adopted worldwide. In fact, in a lot of places it already has. They've got licensing agreements to rake revenue on anybody that's using it. And I think, again, long-term, it's been beat down a little bit. Great buying opportunity right now, and I think long-term it's going to be a good holding.
A little bit, down from 54 to 37, so you better hope it comes back. All right, let's opportunity. Derek, in the industrials, you like 3M, Dow Component.
Yeah, now in the industrial sectors, we look for a different set of criteria. We're more focused on the historical earnings growth of the company, what kind of earnings growth we've seen over the last 5 years, and then look for a reasonable valuation to get that earnings growth for. And we see that in 3M. It's grown its earnings fairly steadily over the last 5 years, and particularly now, post the earnings disappointment they had in the second quarter, you're now getting at a pretty fair valuation.
All right, 3M, and we're going to get into some of your other industrials that we're showing folks right now, but let's get back to Michael here. Phelps Dodge, another industrial, or do you think of it more like a commodity play, PD?
I think of it more as a commodity play. It's the world's second largest copper producer. Supply and demand constraints, they can't pull this stuff out of the ground fast enough. Then you layer on top of that strikes in some of the mines. Demand for copper is insatiable right now worldwide, and so again, these guys are great operators, very efficient, and I think long-term, with or without the Inco deal, it's going to be a great long-term holding.
Derek, you also like Cummins Engines. Why do you like that? CMI within the industrials.
Very similar to 3M. You know, steady historical earnings growth, good valuation. And Cummins Engine, though, is on a different scale. We're talking about earnings growth of over the 5-year period of some 60%. And yet, we're still getting it for a good valuation. They're having good return on their invested cash flow. And so we think that that earnings growth can continue going forward.
Frontier Oil, FTO. Michael, you're naming this one energy play.
Peabody Energy is one that we hold.
Okay, different one. I've got a different name here. BTU, Peabody Energy.
Actually, yep. And it's, again, a play on high energy prices, and it's a coal manufacturer. They're, again, mining the stuff out of the ground, supply, demand. The higher energy prices and oil prices stay, the longer and more people are going to look towards coal as an alternative energy source, and it's widely used in the electric utility area. So we think long-term it's a great growth story. They've got a lot of reserves in the ground.
All right, back over to Derek. Derek, you like General Dynamics, GD. Why is that?
Well, it's obviously a defense contractor, but I lump this in with the industrial industry as well. And so again, in GD, with a defense company, you'd think, well, they see big spikes in earnings here in the last 3 years with the increases in defense expenditures. But the truth is that GD's been managing their growth and keeping a very steady earnings stream over the last 5 years. One of those same characteristics we like to see. Mix that in with a good valuation, and we think this is a stock that's likely to outperform going forward.
All right, now, Michael, Frontier, FTO.
Frontier Oil, it's one of our bigger holdings, and it is a specialty refiner of what they call sour crude. It's the heavier, tougher stuff to refine. Better margins, more and more of the oil coming out of the ground is of this variety versus the sweet stuff. And with energy the way it is these days, people that can do this well are going to make a lot of money. We think it's a great long-term holding. We've held it for a while.
And we hope you're going to make our viewers a lot of money. Thanks for those stock picks, gentlemen. You're top rated, so we expect good performance from you. When we have you back, we're going to test you. Derek Iswell and Michael Cugino. All right, coming up, 1 year after Hurricane Katrina, President Bush offering a message of reconciliation, remembrance, and also renewal.